Long time ago, there was an 8-year-old young boy. His grandfather had a general store. He went there and bought a pack of Coca Cola which had 6 bottles in it. That pack value was 25 cents. He sold each bottle for 5 cents, making a total sale of 30 cents and getting a profit of 5 cents on each pack. From there, he understood the concept of sales and profit margin. Few years later, this same young boy teams up with a friend where both invested $25 each to purchase a pinball machine. They placed this pinball machine at a local barber shop, and as and when people were coming and waiting for their turn, they started playing on that pinball machine by giving a small amount of money. Soon this business started expanding, and from just one barber shop, it actually expanded to 5 or 6 barber shops. And from there, they sold this business to a war veteran for $1,200. And this was his first business idea. His investment of $25 gave him a return of $1,200, that too within 1 year of time frame. This child is none other than Mr. Warren Buffett, who actually announced his retirement very recently in the 60th annual general meeting of Berkshire Hathaway. At the age of 94, he has decided to step down as the CEO of the company, and he is known as one of the legendary investors in the world. Today, in this video, we are going to talk about 7 key lessons from Mr. Warren Buffett and how these lessons can be implemented into our lifestyles so that we also are able to grow our money and generate that wealth over a period of time. To start off, let's start with the first point where he says that we should buy businesses and not stocks. If you are not willing to buy the whole business as a lump sum, don't buy even a share of that stock, because if you can't buy the whole business, there is no point of buying even a piece of it. Stocks are no lottery tickets. Focus on buying the stocks of businesses that you wholeheartedly believe in. And that is where he focuses on buying the stocks of those businesses where you actually see real value rather than just focusing on random tips or friends' suggestions. The second point that he always talks about is margin of safety. This comes from his mentor Benjamin Graham, which means that we should buy things for less than what they are worth of. This gives us a cushion if something goes wrong. Always go for the stocks where you think that it is devalued. If you are buying something cheaper, you will always be in profits, and that becomes his whole game of investing. Number 3, long-term thinking. Always go for the long-term thinking. He doesn't panic when the markets fall. He didn't panic when it was 2008 recession or whether it was COVID 2020, because he always believes in the fact that time in the market is always greater than timing the market. There is no better game than purely investing in the market for the long run. I know it is difficult because as a common man, one or the other milestones of life keeps coming up, and that is where it is very important to have a goal-based investment planning rather than just investing randomly into any mutual fund or any stocks. With this, you will always be able to focus on what are your short-term goals, what are your mid-term goals, and what are your long-term goals. And based on that, you can actually diversify your portfolio and focus on each of the goal, and then start investing in the right funds based on the time horizon on which you are investing. The fourth key factor that makes him a legendary investor is the importance of mentors in life. Buffett always reflected on the significant positive impact of key mentors and teachers throughout the life, be it Benjamin Graham, be it David Dodd, be it Tom Murphy, be it Charlie Munger. He always stressed on the importance of finding individuals who can actually guide you and change your life. It is a famous saying that we are the average of 5 people that we are surrounded with. And keeping that in mind, we should always focus on which are those 5 people whom we want to be surrounded by so that we can also change our lives dramatically, and treasuring those relationships also becomes a key important factor. Fifth point that Buffett always teaches us is the importance of learning. We all must be aware of the 100 hour per year of learning rule, which means that if you are spending around 18 minutes per day in any of the field, you will fall into top 5% of those people. Warren Buffett makes sure that he's spending 5 to 6 hours on reading, be it newspapers, magazines, financial reports, investing books, or business biographies. His favorite investment books include The Intelligent Investor by Benjamin Graham, along with Philip Fisher's Paths to Wealth Through Common Stocks. This habit of Warren Buffett, if implemented in our lives, it can change our financial future, because even if you are spending a little bit in a day about focusing on your financial future, I'm sure you will end up getting rich. The second last point, and that's what he also mentioned in his latest AGM as well, that we should always have substantial amount of cash in our pocket. As of now, Berkshire holds over 300 billion in cash and short-term investments, representing a historically high percentage of total assets. Buffett always says that we should hold cash because we should wait for the right moment to invest. For example, in case of COVID 2020, when the market fall to around 27,000 Sensex, if we had huge amount of cash in hand, we could have leveraged that time and we should have invested that money in the market, because that was a time where everything was so much devalued that it was the best time to enter into the market. And that is where he always keeps in mind that he has a substantial amount of cash available in his pocket, in his bank account, so that when the timing is right, he can always enter into the market. Last but not the least, he is always focusing on the fact that we should be patient, but we should be swift in our action. By patience, he is focusing on having a long-term investment thinking, but with swift action, it means that whenever the timing is right in the market, it is always important to enter into the market. Be greedy when others are fearful, and be fearful when others are greedy. He has always made sure that he is entering into the market or investing a lump sum amount of the money whenever the market has seen downturns, and that is where he is able to build his wealth over time. If we focus on Berkshire's investment journey from 1965 to 2024, we will see that S&P 500's CAGR is around 10%. However, Berkshire's CAGR is coming around 19.9%. These 7 factors are the key factors that Buffett has always focused on and made sure that he is leveraging all these factors when the market is down and when the timing is right, and also focusing always on the long-term strategic thinking. Keeping this in mind, it doesn't mean that we should not enjoy our lives and keep on investing the amount. To make sure that there is a proper budget that is being planned where you are investing as well as you are enjoying your current life in today's time, you can go to my this video where we are focusing completely on how the monthly budgeting should be set up. And in case you want to discuss your finances with me and get them fixed, link is below in the description. You can always book a call with me. I'm just a call away. I hope you liked this video. You will implement all these 7 learnings from Buffett's life in today's time. And this is all for today. I'm Nipun Bhatia signing off. Plan today for a brighter tomorrow. Thank you.